Hi everyone, welcome to the Mighty Trades channel and welcome to another episode of the Global Market Outlook. So last week was extremely difficult. If we look at what happened to Nifty, then we can see that Nifty corrected by 4% last week. The week before that also it corrected by 4%. So not a great sign. If you look at the broader market at Nifty 500, this corrected by 4.7%. So broader market definitely looks weaker. And the week before that it corrected by 4% as well. So definitely the market is not in a good shape. So let's try and figure out for how long this pain can last, what levels we can see, what levels we need to watch out for. So let's start with the usual routine. Let's look at what's happening with crude oil first. So crude oil is still sustaining above $100 per barrel. It's been consolidating in this range for the better part of April, for the entire month of April, and this month of May as well. It's been consolidating here. So we are looking at the weekly chart of crude oil right now, and as long as crude oil stays above 100, inflationary pressures across the world are going to be high. If we look at silver has seen a deep correction. That's a very good sign for the market, that the commodities are not seeing, especially precious commodities, are not seeing a runaway rally. If we look at gold has also corrected quite steeply. This is also a good sign because this is sort of giving an impression that money is not finding its way to safer havens. Gold is a preserver of wealth. Whenever there is uncertainty in the market, a lot of people go over to gold because gold will sort of preserve that wealth instead of eroding it. So gold is also not seeing a runaway rally. So that is also a good sign for the market. Where we are though seeing a runaway rally is in two places. First is the US 10-year GSEC. The demand for this has gone up because the interest rates in the US have gone up significantly. So a lot of money is flying to the US because you have to think a 3% interest rate might not sound like a lot, but when you look at the scale of things that happen in the Western world, where US's largest company was valued at close to $3 trillion, while India's largest company is valued at just $300 billion. So that puts in perspective the amount of money that is there in the US. So even a 2-3% return on that is considered as a massive return because just the quantum of money is so much. So clearly there is good demand for the US 10-year GSEC. A lot of money is flying over there, and that is clearly visible by looking at the US dollar index. The US dollar index is trading at all-time high levels. It's in completely uncharted territory. If we look at the monthly chart, it's given the highest closing ever since this index has started. So not a good sign. A lot of money is flowing out of not just India but a lot of other emerging economies. A lot of money is being pulled out and put back into US or wherever that money had come from. So the demand for dollar is going up while other emerging currencies are going down. So not a good sign for emerging economies, which India is also part of. So that's the view on some global macro things that are going on. Let's take a quick look at the other Asian markets, how they did. Let's switch back to the weekly chart over here. So the Japan market only corrected by 2%, still in a downward channel. There's no bullishness over here as well. If you look at Hong Kong, the Hong Kong has corrected by 0.52%. It opened the week very low, but then I think throughout the week it slowly gained but could not break this previous resistance over here now. So Hong Kong is still very bearish, though it's in a complete downtrend right now. But last week it outperformed Nifty at least. If you look at the Turkish market, it's been consolidating for the last 4 or 5 weeks in this range only, where it's at right now between 2,400 and 2,500. If you look at the Taiwanese market, the Taiwan market has broken an important support level here and given a closing below that. The next support comes in at 15,000. If this is also broken, then the next level directly is 13,000 points. So Taiwan market is looking a little shaky right now. If this support level holds, then well and good. Otherwise, the Taiwan market can see very sharp pain going forward. If we look at the European markets, then France moved up by 1.67% last week. Still in a downward trajectory though. It needs to break, it needs to sustain above 6,700 levels to give confirmation of some momentum or some bullishness on the long side. Until that happens, this is largely going to be a down move. If you look at the German market, this move also moved up by 2.59%. And this is a nice strong bullish candle that we can see here. It's completely engulfed the previous red candle over here. So the German market did pretty well last week. But again, it needs to cross this previous support, which is now the resistance. So for a closing above 14,800 will give confirmation that the German market is looking positive. If we look at the UK market, this moved up very slightly by 0.41%. It opened very low and then moved up throughout the week over here. So the UK market is looking sort of stable. It's not corrected too much from its 52-week high of 7,600. It's at 7,400 levels. But obviously any further momentum can only be seen above 7,665 levels. Now moving over to the mother market of everyone, which is Dow Jones. Dow Jones did okay last week. For the first 3 days it fell pretty drastically, and we can clearly see that it broke this level in the last week of April, and then came a further sell-off, and now it's also broken this level of 32,415. Now, one good positive thing in all the US indices is that there has been a sharp pullback from the bottom, right? The Dow Jones index went down to 31,230 and now it's come back to 31,152. So it's close to a 800-900 point pullback that we have seen. However, it has closed below this major support level here. So if we switch over to the daily chart, we can clearly see there was a nice comeback that happened in the last 2 days. So hopefully, I am assuming that the Dow Jones index could potentially retest this previous support zone, which would now act as a resistance. So maybe for the next 1 or 2 weeks, you might see a pullback rally here till here, and then we might see a correction again down till 31,000, and that would also take maybe a Nifty up, which will give a lot of people a chance to exit from some of the weak stocks that they might be stuck with right now. But overall, the structure is bearish, but there can be a pullback till 31,000. It's a similar scenario with S&P 500. It has broken 2 of its major supports. In fact, 3 of the supports that I have drawn. It's given a closing below this. We can again see a pullback till 4,150 levels or till 4,300 levels. Looking over at Nasdaq, this has fallen below this major support line of 13,000, precisely 12,975, and this also saw a pullback in the last 2 days. It can potentially go and retest the 12,975 to 13,400. But overall, the structure for Nasdaq is also looking weak. If this level is broken, then the next support would come in at close to 11,000 points. So overall, the US market, in summary, can see maybe a pullback the next week and then continue the down move from there. If any of the indices go above their previous supports, which should now act as resistances, then we can see a fresh level of buying that might come into the market after that. Now, coming to our market, let's start from the small cap index. So the small cap index, which I believe most of us would be invested in, is looking extremely weak right now, much weaker than Nifty also. So we can clearly see that the small cap index has broken this major support level of 9,627, and it has broken this very strongly and corrected by 8%. Now, if this level is broken of 8,550, then we can easily see a correction down till 7,600 levels. One more thing that we can see is that we can see sort of a head and shoulder pattern that has been formed here. So this is the left shoulder, this is the head, and this is the right shoulder. And if we are right, if this is a head and shoulder pattern, then according to the target of the head and shoulder pattern, this sorry, we can see some further pain down till these levels, which is 7,700. So exactly, it could potentially take support over here, and this would basically bring the total fall of the small cap index down to 35%. So there can be further pain that we could be looking at in the small cap index, in the small cap stocks. So however, the pain is not much from this point on. If you've handled the pain till here, then you just have to handle another 10-11% fall. So be very careful about the positions that you have. If you are still holding some positions in profit, I would suggest you can book those profits. If you're sitting in significant losses, there might be a pullback rally next week and the week after that also. So that can give you a good exit opportunity. If the small cap index crosses 9,600, then there will be a fresh long till 11,000 levels over here. But if this level is not broken, then definitely we can see the small cap index falling till 7,500 levels. If you look at the mid cap index, mid cap is looking stronger than small cap definitely, but this is also again trading at a very crucial level. If this is broken, then the next level automatically will come to 24,500 to 23,000 levels. Now let's look at certain sectoral indices to see how various sectors are performing, and if there is any sector which is currently more bullish than the rest of the market. So if you look at the metal index I think has seen the heaviest fall last week, a massive fall of 12.4%. So this was a crazy fall that came in the metal stocks. However, this is a very strong base for the metal index for the last 1 year. Hopefully it should not break this level of 5,160. If it does, then we can see a very deep correction in the metal stocks down till its previous resistance of 4,200 levels. Looking at Bank Nifty is also in a downward channel similar to Nifty. So this is definitely correcting. Same thing is the story with the private bank. PSU banks have given a closing below this crucial level of 2,450. So there is some weakness that's there in PSU banks. The next support would now come in at 2,199 and then directly at 1,930. So PSU index is definitely looking weaker than the Nifty private bank. Nifty PSE, which is the public sector enterprises, this index is looking okay. It's not broken any major level. In fact, it was one of the few sectors that was going up very well during the last couple of weeks. Obviously, with the last 3 weeks, with the entire market sell-off that's happening, even this has fallen, but it's still above its crucial support zone of 3,800. So there is definitely some good picks in the PSE stocks like Hindustan Aeronautics, Bharat Dynamics, which are all doing extremely well right now. Looking at the IT index, very weak, very sharp sell-off happening since 6 weeks now. I think we can see the IT index come to 25,550 levels. If this is broken, then it will come down to 24,000 levels because there is no support in this entire zone till here. Looking at the FMCG sector, this is actually doing pretty well. This is holding the market up. FMCG companies, as you all know, no matter what situation is, no matter how much inflation there is, you still need to eat, you still need to brush, you still need to have a bath. So all these companies will continue to do business. Their margins might be in a little pressure right now, but they will start gaining market share from the unorganized players because the unorganized brands which are there currently in the market will not be able to sustain these margin pressures. So these companies will get the chance to grab that market share, increase their customer base, and then grow their revenues accordingly. So FMCG stocks are, I think, a good bet right now in the kind of market we are in. Media companies, let's see, nothing happening here. It's at a crucial support level. If this is broken, then The media index will also start going down. If we look at infrastructure stocks, this is also corrected quite sharply, still above crucial level of 4,500. If this is broken, then we can see a sell-off coming in infrastructure stocks as well. The reality index has already corrected. It's already given a closing below 415 points. So this has already become weak. If it breaks even this level of 373, then we can see a fall off up to 300 points here. So the reality index, the real estate index, is definitely looking very weak. It's, I think, better to avoid this companies from this sector right now. Auto index doing pretty well, it's consolidating since the last 1 year. It has not corrected that deeply. In fact, it consolidated for most of the week. It made a proper doji candle last week. So we could maybe see some bullishness coming in automotive stocks. And it is still far away from its crucial support zone of 9,500. So there is a 1,000-point room to fall. So that is a good thing that while most of the sectoral indices are very close to their support levels, the auto index is still very far away from its support level. So definitely there is some bullishness in this sector. Energy sector corrected again very deeply, very similar to the metal index. While the metal and energy sectors were outperforming the market, everything else was falling down. Now these sectors have also corrected, but it is at a crucial support zone again over here. This was the previous resistance, which should potentially act as a support and give a bounce to the energy sector. But if this level is broken, then the energy sector can see levels of 22,000 points. However, energy is one of the few sectors where there is a lot of bullishness still. So if you see any bounce from this level again, you should definitely increase your positions in the energy sector. If we look at the consumption, then this is also in a downtrend channel, nothing happening here. And companies which are dealing in consumption, which is your consumer discretionaries like washing machines, refrigerators, etc., these companies are going to see significant margin pressures. And with inflation so high, there will be people who will be looking to buy fewer appliances, etc., because they want to save that money. Since we don't know how much our electricity bill is going to go up, we don't know how much our fuel prices are going to further go up. So people will be in a mood to save money rather than splurge it on discretionary items. So these companies can see a correction further down till 6,200 levels to 5,800 levels. Moving on to finance, extremely weak. Please avoid all finance companies. While the RBI is hiking up interest rates, etc., this will affect NBFCs because they'll have to borrow funds at a higher interest rate, which will reduce their margins. So again, all these things are being factored into the market right now, which is making the correction happen in the market. Pharma sector has been weak since a very, very long time. There's no bullishness at all in this, so better to stay away. And looking at the broader market, as I've already said, the broader market is at a very crucial zone right now. If this level is broken, we will see very sharp pain down till 12,000 levels because there is no other support in the middle. So the two key levels that the Nifty 500 can take support if the current support of 13,500 is broken is these two levels right here, which is 12,600 and 11,950. If we look at the India Volatility Index, then this is also on an upward trajectory since the last 5 weeks, giving its highest close at 23.5%. So definitely there is fear in the market that things might go further down. So this is also not a good sign. If major levels in Nifty and Nifty 500 are broken, then we can see some panic sell-off coming into the market. And if we look at USD INR, then the rupee has weakened very significantly. There is no change in this trend. It's consistently making higher highs and higher lows. So I think we can see the Indian rupee depreciate further going forward. Now, one interesting thing that I've been observing in Nifty is that Nifty is in this sort of downward channel that we can clearly see here, right? and it's very close to the bottom of this channel, so we can maybe see a pullback for the next 2 weeks till the top of this channel, or maybe till the midpoint of this channel. So that's the analysis right now. And what I also did is I sort of went back in history a little bit to find out instances where Nifty has behaved in a similar fashion. So we can clearly see that this is a downward channel that Nifty has been in since October last year. So this was the top that it made, then this was the bottom that was made over here when the whole war in Russia and Ukraine started. Then it again made a top over here, and then again it's now sort of testing the bottom of this channel. So we can potentially see Nifty going up and down in this downward channel itself. Now the last time such a channel was made, it was made last year in the month of February till the month of May. So for almost 5 months the market consolidated in a downward channel like this. Then finally we saw a breakout happen in the month of May, and then the market moved up. Now a similar situation like this happened back in March 2015. So we can clearly see there was a downward channel like how we are seeing right now, and this channel went up till the month of April 2016. So for an entire year the market was just in a downward channel, correcting very deeply, and this entire correction came down to 24.5%. Then a breakout happened on in the month of April. That breakout was retested again over here in the month of May, and then once the breakout happened, then the market started moving up again. As you can clearly see, the market took 1 year to get from 9,090 levels to 6,900, and then once the breakout happened, the market took only 6 months to come and retest its previous resistance or its previous all-time high. And once this retest was done, the market again corrected back down to these levels, and then finally gave a breakout here and started moving up. So that's the real phenomena of the market. You know that when the market goes down, it takes so long to go down, but when the momentum starts, it just took half the time to come back to its previous all-time high. So that's something to notice. Now the next time that I observed this happened in the past was back in 2010. So this top was made in November 2010, and since then the market was in a downward channel, and then finally a breakout happened in Jan 2012. So it took the market approximately 2 years for not 2 years, sorry, it took the market approximately 13 to 14 months to complete this correction phase. Then finally a breakout happened in Jan, then that breakout was retested back in May. So for 5 months again the market fell, retested this level, and then finally it slowly and steadily kept going up all the way till 9,000. So in my opinion, looking at the past history, we could potentially see the market be in this corrective downward channel for the next 12 to 13 months. If this channel is respected, then we can see this market consolidate. This is just my analysis. The market can very easily break this level and go down directly till here and then possibly move up. But if not, if the market has to fall slowly and steadily, then it will fall for maybe the next 12 to 13 months. We are already in this channel since October, so maybe till October of this year or till Jan of next year we might continue being in this channel. So another, you can say, 7 to 8 months more that we might have to bear with this correction. Although the market will keep giving opportunities to make money, because if it comes down to this channel and goes back up there, you can make use of these swing lows and swing highs to either go long in the market or go short in the market. So a trader should be able to make money even if the market is going sideways in a downward channel. So that's the view on the market, and in summary, the markets are not in a good place right now. I think all the markets across the globe are going to continue to correct for a couple of months more. Once these inflation fears die down, once all these central banks are done hiking the interest rates, And once crude oil becomes a little more stable, if things improve in the Ukraine-Russia war, which might improve in a couple of months, maybe by winter they might reach a stalemate and do some ceasefire, because over there it gets very cold up there in the winter and makes fighting a war also pretty much challenging. So all these factors could potentially play out by October, November of this year, and we can start seeing some positivity in the market. But as of now, for the next couple of months, I believe the market is not going anywhere. I don't think there's going to be any aggressive bullish momentum in the market. I think it's going to slowly and steadily continue going sideways or in a slightly negative downward channel. So hope you enjoyed watching the analysis of the market, and do take care of your positions. Don't go too aggressively long. You can make good money by shorting if you know how to. So that's the view on the global market analysis. Thank you very much for watching the video, and goodbye.